Silver has broken out. We're trading over $61 an ounce. Gold is trading around $4,200 an ounce. And we're expecting a Fed decision today. It is Fed Day here on Soar Financially as well. It is December 10th. And I've invited a phenomenal guest today. His name is Gareth Soloway. He's the chief market strategist over at Verified Investing. As you recall, we had Michael Oliver on late last week, and we talked about his newsletter and how he called to silver and gold breakout. Now I've invited another chartist or a technical analyst onto the program to help us verify the breakout. Like, where is this headed? How strong is momentum? Like, should we be buying more? Should we be selling? Is he worried? Is it a bull flag, bear flag, and all those technical terms, right? So really looking forward to the discussion with him. And of course, what is the impact of the Fed? And it's Christmas season. It's holiday season. What does that mean? Year-end positioning. Does he see extra momentum coming in the market? Are we already seeing that? Are the big stocks, the big names being bought because people just need to show that they've owned them? Same with gold and silver, of course. So really interesting discussion. Really looking forward to this here with Gareth. But before I switch over to my guest, hit that like and subscribe button. Helps us out a lot, and we much appreciate it. Now, Gareth, as always, it's great to welcome you back on the program. It's good to see you again.
Hey, great to see you as well. Thank you for having me back.
Yeah, really looking forward to this, Gareth, and lots to discuss. Year-end, a bit of a year-end rally, definitely in the precious metals, but even the S&P 500 is holding up dearly or nicely, actually. But before we look at some charts, let's frame it a little bit, because I know you also follow the news. You're not a technical analyst that only looks and stares at the charts, but you have a focus also on what's happening on the macro side. And as I mentioned in the intro, it's Fed Day today here on Wednesday. Run us a bit through, like, what are you hearing? What are you seeing? What are you seeing in the markets?
Yeah, so number one, we're definitely expecting the 25 basis point cut. That's virtually priced in at this point. It would be a ridiculous shock to the markets if we didn't get that. So the Fed Funds Watch tool is about 90%, which is as much of a sure thing as we can get when it comes to Fed decisions. The key is going to be the language that Powell uses in his press conference. Markets are pricing in a hawkish language kind of chatter. That's what's being priced in. If it's anything less, then you'll see the markets be happy about that. However, this is the one caveat. People think if he was super dovish, the markets would really rip up. I would counter that and say if he's too dovish, the markets would say, well, what does he know that we don't know yet? Are things deteriorating much faster? And so really what we're looking is at this Goldilocks scenario of him being hawkish, but maybe just slightly less hawkish than the markets are anticipating. And then that would yield further upside and maybe that end of year Christmas rally.
Yeah, Trump is apparently supposed to start interviews of new Fed candidates this week, I've been hearing, just today. So I'm really curious what that means. And of course, I'm not sure, like mainstream media loves that narrative, of course, because changing of the guard there at the Fed. But what do you need to see, and maybe just to rephrase what you just mentioned, but what do you need to see that would upset the markets in either direction, up or down?
Yeah, I think the keys would be if Powell raises the concerns about inflation and insinuates inflation could go up. That would be something on the more hawkish side that even the markets aren't prepared for, considering what the PCE data showed just recently, and then vice versa. So too hawkish is not good, and then on the other side, too dovish, as again, it's counterintuitive because, the Fed's dovish, more money, more cuts in rates. But at the same time, the markets are very concerned about U.S. growth, right? GDP growth, the economy. And we have seen the labor market slowing down, but the labor market slowing to a standstill, we're not seeing a ton of layoffs yet. And so I think the market just wants that Goldilocks number. And then ultimately, what's so fascinating to me is that today we have Oracle reporting after the bell. Larry Ellison is a big fan and big friend to Donald Trump. And we see past Fed announcements, there's always this announcement that comes or something set up for right after to change the narrative away from a hawkish Fed to back to the markets, the AI trade, things that have been working, trade deals, for instance. And so I do wonder, and again, remember, the CEO decides when the company is going to release earnings. They have a window of about 3 months to do so. It's not a coincidence that Oracle is reporting the day of the Fed right after the Fed in the after hours. My assumption is they're going to say something very positive to take the narrative away from the Fed and back to the AI trade.
Yeah, the AI trade is an interesting one. I've been following NVIDIA, President Trump allowing the export of the H200 chip, to China. China says, actually, we don't want it. So they're already priming the pump here, in my opinion. So that's sort of the narrative I'm picking up, of course. when it comes to like hawkish stance, like let's elaborate. Like, are there any words we should be looking for? Any certain commas in any certain sentences? What are you paying attention to? What have you algorithm trained to here, Gareth?
Yeah, in the olden days, it was when Alan Greenspan, you looked at his briefcase, and if it looked heavy, then it meant like Fed cut or hike. But if it wasn't, there's all these things. But in essence, it's going to be the general interpretation. I don't have any specific words, but obviously if he starts harping on inflation and concerns over inflation, and then what does he say about the economy? Does he really harp on things are weakening? Does he stress that? I think those are the key factors that we're going to watch during the speech. And really what I do is I keep the speech up on one screen, and then I watch the S&P on the others. And I might even flip to the dollar and the 10-year yield. Gold is another one. Watch to see how the market reacts as he's talking, and that really tells you how the market is feeling. If the market starts to dive, he's either way more hawkish or way too dovish. If the markets start rallying, it's probably because he's just right, nailing it perfectly, slightly hawkish, but not overly hawkish.
Yeah, I've noticed that in the gold trade. If you watch it, it usually goes up while he reads from the script, but then it drops when he starts actually answering questions.
That's right.
So I've seen that happen. It's kind of entertaining. It's always good. What does Trump call it? It's good TV.
Yeah,
So it's good TV. Let's talk about some charts here. Let's start with the macro, but the high level. Let's run through some asset classes here. We always like to start with the S&P 500. You have some charts prepared here for us, Gareth. What are we looking at here?
Yeah. So this is a great chart. This goes back to the COVID lows down here, and what we see here is that the low from COVID connects perfectly through the bear market lows, 1 low, 2 low, and 3 low, and extends out and gave us our low from the liberation tariff sell-off. Now, the reason why that's important is when we extend a parallel up. So you can see this is a perfectly parallel trend line or channel. It basically gave us the recent high right here. And the reason why that's important is that we have to assume, because this gave us the exact major lows on the market and the high from the bull market of 2021, that until we break above it, the top is basically right here around 7,000 on the S&P. And ultimately, that limits our upside. So even though I am a believer that we might see a Santa Claus rally, even if we get a rally, it's somewhat limited to about 2% upside on the S&P, versus downside obviously has a lot more distance to run. And so again, as a technician of the charts, I have to look at risk versus reward. And while the odds may favor an end of year push, kind of the window dressing, the kind of Santa Claus rally, we also have to say, well, is it worth it going long to the markets when there's so little upside remaining versus maybe sitting on the sidelines or even being slightly short? And I certainly am more geared towards the short side, the belief that, again, it's more likely we'll see some downward movement here.
Gareth, I don't think I've ever asked you that, but do you use leverage as well? Meaning, like, okay, it's only 2% upside, depends on what Powell says here in a few minutes or a few hours here. Would you go in there, let's say 10x leverage, 20x leverage, like really some, I wouldn't say a crazy bet, but because you're an expert, financial expert here, but would you use leverage here?
I personally don't use a lot of leverage. Occasionally I use 2 to 1, maybe on day trading a little bit more than that. But the biggest thing I've found is that when I think something's a sure bet, I usually am wrong, right? If I think it's like, okay, this makes sense, the logic is there, and I go in smaller, that's usually where I'm right. And so the worst thing to do as a trader or an investor is go all in, because you commit all your capital or a majority of your capital. And then when something happens that deviates from your plan, you have no ability to maneuver. And maneuvering is so important as an investor because it allows you to dollar cost average, go in a little bit more, then it bounces, you're in the money slightly, you take a little off. And so for me, at least, I've learned the hard way early in my career that when I go all in or leverage up, I usually take losses. But when I kind of keep it where I can maneuver, I actually make a lot more money. And so that's my philosophy on trading. I'm not a big fan of using tons of leverage because it only takes one time when you use a lot of leverage to be wrong and you wipe out your account.
Oh, absolutely. And that's when you break screens and yeah, no, we don't need to go there. Talking about the S&P 500, I need to throw in the topic of seasonality. And you touched on it, Santa Claus rally, of course. I mentioned it in the intro, year-end positioning, just to show that you have certain stocks or positions in your portfolio as well. I'm just looking at the S&P 500 component year-to-date return list, and it's, of course, the manufacturer hardware components. SanDisk, Western Digital, Seagate, Micron, they're in the top 5 here. Newmont is ranked 7th year to date, absolutely stellar performance. But what do you see here? What should we expect? Have we already seen the most of it happen, the positioning?
Yeah, I mean, I think looking at like Western Digital's chart, there's been so much upside, right? So much massive upside. If we go to the April low, Western Digital WDC was at $29, right? And here it sits at $175. And so what that tells me is that a majority of the good news is now priced in. And sure, could this go up to maybe 200? Yes, it could. But at the same time, what's the risk? What's the risk of another drawdown? Remember, just basically a month ago, we saw a drawdown on Western Digital of 26%. And so, again, yeah, you could get another 10% to the upside. But for me, I would much rather start looking for the reversion trade where investors have gotten way too optimistic. All it's going to take is one hiccup in the AI sector, and all of these can come down literally 30 to 50% and still at those levels be fairly valued. So again, I would strongly encourage people not to chase. Chasing is something that emotion triggers within us. The best traders in the world are agnostic in that they look at charts and data to make decisions. If they rely on emotion, and I can speak firsthand, I've done this early in my career, I get on the wrong side at the wrong time, and I usually pay the price. So again, look at a chart and say, wow, it's up massively. The greatest analogy I could make is, when we go to the store, we go to the grocery store, and let's say milk was $3 a gallon last week. Now it's $20 a gallon. We don't go to the store and say, oh my goodness, I got to buy 20 gallons of milk because this is amazing. It's at $20 a gallon. We say, you know what? I'll just wait till the price comes back down and then buy our milk. Treat investments the same way. Usually you get a better entry.
Yeah, no, makes a lot of sense. Really appreciate that. Let's talk about like sort of the weighting in the S&P 500 as well. We picked out Western Digital, but SanDisk, Seagate, Micron, even Warner Brothers because of the takeover battle here. How much of an impact do they have on the S&P in general? Those are smaller weighted stocks, of course. So I'm trying to figure out like what happens if an Nvidia drops by 1% or rallies by 1%. What should we be paying attention to in the big indices here?
Yeah, and so in the big indices, it's so important to understand weighting because essentially we've gotten these mega cap companies, the Nvidias, the Apples, the Microsofts, the Broadcoms. They are so massive now that essentially those 10 companies, the trillion-dollar names, they essentially make up 50% of the S&P. So you could have a SanDisk go up or down 20% in a day, and it would almost have no impact. Or in fact, Nvidia just dropping by 1% would essentially cancel out the SanDisk going up by 20%. And so it is important to understand that because money has flown into these specific names, these mega caps, that is becoming the market. That essentially is the market. And it does mean that the net gains for investors that are in these ETFs, these equity traded funds that follow the indexes, you're basically investing in the mega caps. If the mega caps stumble, even if there's a rotation in capital, you're going to end up losing money.
No, I fully agree, and it's a dangerous game to play because
it is.
Just the news out of China is like, we don't need your chips, we don't want your chips, and then you hear stories like, well, we import them illegally anyway, so
right.
Might as well. It's a fun story to follow. I'm sure there'll be a Netflix special about it at some point. Because I was also listening to Jensen Huang on Joe Rogan while driving this morning. I was driving up from Munich, so that was a very interesting conversation. So I'm sure there's a Netflix special in the making. We'll get back to Newmont here in the S&P 500, but oh yeah, because I wanted to talk gold first and set the scene a little bit before we talk Newmont. Quite honestly, because I'm really keen on what your take on gold is. I had Michael Oliver on. I mentioned that, and he said, well, gold and silver both broke out versus the S&P 500, which is a massive technical signal. And I'm curious what your takeaway is here. What are we seeing, and how strong is that breakout, or was that just a head fake?
Yeah, so the breakout on gold came, at least from my analysis, you did get a breakout on gold. If we look at the chart here, you see what's called a wedge pattern. So you take the all-time high to the secondary high here, And then ultimately you could see there was this wedge forming, essentially a triangle formation where it squeezes price, right? And that's what a wedge pattern essentially does. It squeezes price until price either has to break out or break down. And what we've seen is price broke out above the wedge. So again, this triangle, the white trend lines are the wedge pattern. It broke out, and now what's doing what we call a bull flag formation, which is just like the name says, it's bullish, right? And so the idea is this favors a move up to retest the all-time highs. Once we get there, we'll have to see if it breaks the all-time highs. That will be resistance, but again, resistance can be broken. And the only thing you want to monitor as a technician here is if by chance this bull flag fails and we start trading below this wedge pattern, these two trend lines, well, let's say we trade down here, that would be the one bearish scenario that could have come where gold would go lower in the near term. But aside from that, I'm bullish on gold here in the near term. Makes a lot of sense. I think we'll know a lot more after the Fed decision. We'll probably see some sort of move, but it is a bull flag formation after a breakout on gold.
Yeah, gold is trading sideways as you've just shown us here, because I think it is waiting for comments from the Fed. We're in blackout, or have been in blackout for the last 7-8 trading days, I believe. So we didn't hear much, of course, besides a commentary out of the White House. But you gave us a bit of upside prediction here for the S&P 500. Do you have a similar scenario painted for gold, besides maybe trading up to the all-time high, which is only, as you probably what is it, a couple $100?
Yeah. Right.
So
and the reason why a good tech, and I think it's important to understand, like a good technician, we might, like I have long-term holdings in gold, right? So I'm a big fan of gold. I see what's going on in the government, the world, the central banks are buying like crazy. Like everything's pointing that gold's going to continue up. But as a shorter-term trader, I have to respect the double top, the all-time high, until proven otherwise. Even though longer term, I think it's going a lot higher. So in talking about where could this ultimately go, I think what we have to do is you have to kind of start to look at some of these bigger patterns. And what you want to do is you want to zoom out and go to a weekly chart and say, okay, let's look at these past bull market moves on gold, right? So we'll remove all our trend lines. We're even going to go to the monthly chart. And what you do here is we start to say, okay, well, let's say that the last bull move in gold, like the expansionary blast off, took us up around 176%, right? So that was a pretty big move. You could argue it even goes back down to here where it was about a 375% bull move. And this, by the way, was in the 2011 period. Now, if we go back to the 1970s, let's look and see how big of a move this was. And this one was about 700%, right? So again, gold was obviously a lot lower back then. I would even argue we need to even go to the recent lows here. So we're looking at about 700 to 800% in the 1970s. In the 2000s to 2011 top, we're looking at about 658%. And so we do see it coming down percentage-wise because the price is getting more pricey. But if the same methodology holds true, we would say, okay, well, let's go up and let's do 550% or so. And really, if you're looking at these longer term viewpoints, and we're definitely talking around $7,000 per ounce. And that would be following the same trend of, let's say this is about 750%, 650%, and then 550%. That gets us to a target of around 7,000 on gold. And again, that would be amazing for those of us holding gold. Is it going to happen in a straight line? The answer is no, it generally doesn't. But I do think by 2030, I think we could easily be at 7,000 an ounce.
Yeah. Follow the trend to 7,000. It's going to be my YouTube title. I just came up with that, so I really appreciate that. No, fantastic. No, it's really interesting time that we're in, of course, because
it is. It's interesting and scary, frankly. I mean, I think we can all agree that all the stuff that's developing is definitely. I mean, there's really a need and a want to hold gold, probably more than any time in recent history, in terms of concerns, right, about what's going on. I mean, again, the U.S. has had debt, but the levels of the debt, and I would argue that more the inability for the government to work on curbing through just common sense is the scariest thing of all.
Yeah. Well, and then we have new entrants, new buyers as well. Right. Tether using all their T-bill and Treasury bill proceeds interest payments to buy gold.
That's right.
They're the biggest buyer. They're bigger than any central bank right now,
That's
which
right.
is absolutely mind-blowing. So it's a little scary. I used to euphemisms like, hey, we're like dogs chasing cars. We don't know what to do with it once it stops,
That's
right?
right.
Like we're running after it, we're barking, and now it's stopped, and like we don't really know what to do with it. We're still trying to figure that one out, to quite honestly. So it's a good problem to have, by the way. I'm not. I almost sound negative here, but I think it's a good problem to have.
Yeah, and I would strongly encourage people is like there's a lot of investors because we're generally long investing, right? We're long stocks, we're long gold. All we want to hear is the bull case, right? Because that feeds into our emotional hopes that we're going to become wealthy. But I strongly encourage people to look at both sides. Be an informed investor. You got to know the drawdowns, the risks that you're taking versus the rewards to make that educated decision.
Absolutely. You had the Newmont chart up already. Might as well throw it in here now, just to see how it correlates also with the gold price move and what the upside is, what is priced in, what should we be expecting? Because I think Q4 is going to be an absolutely insane quarter when it comes to free cash flow for any of the miners, by the way,
Yep.
gold miners. So I'm curious what your take here on Newmont is.
So Newmont, just like gold, broke out. I just put this trend line in. Take a look at this. This was from that previous high back in October. Here was our secondary high. And so this kind of created that same kind of wedge pattern that we had on gold, right? You could even take this, right, and just draw it right through. There's your wedge, classic triangle pattern wedge. Look at how Newmont behaved. It broke out. It then made some bullish consolidation and is now starting to break up. Just like gold, it's going to have to fight through its double top around 98. But again, the idea is if gold goes and breaks its all-time highs, you have to assume Newmont's going to do the same. And the chart, again, is reflecting a bullish bias right now.
Yeah, absolutely. I'm massively bullish on the miners in particular. The Q4 number is going to be about $500 higher on average
Amazing.
than the Q3 gold price. I've realized gold price. Absolutely insane because we have been rallying like crazy, and it's just mind blowing. Like the numbers and the free cash flow we will see. Gareth, we need to talk silver. Absolute massive breakout. Over $61, close to 62 here. Although it looks like we're still in this channel. Have we broken out in silver?
Yeah, so this is true. So number one, price did break out because it's made a new all-time high. But look at this. This is fascinating. And keep in mind, we're only going back to August on this chart. And when you go to a short time frame, it gives you a short-term move, right? When you're looking at a monthly or a weekly chart and you're going back 10 years or so, you're going to get the bigger move overall. And what this tells us here is that silver has likely put in a near-term top, meaning that in the near term, it's due for a little bit of a pullback, much the same as what happened here. Remember, we had this big move up, and then look, we chopped around, and then eventually we made new all-time highs. And so what I would expect here is the same sort of thing, maybe a pullback down to, let's say, 54, our prior high, maybe even down here. But the beauty of this, it's still an amazing uptrend, and the idea is very clear, is that even if we come back here, eventually we're likely to go up as long as we don't break this upsloping ascending trend line. And so short term, I like it for a pullback on silver. It's had an amazing near term. I mean, think about this. On November 21st, silver was $48 and change. I mean, it just today, we're basically at $62. I mean, that's an incredible move for silver. It's due for a pullback. Don't be upset about that. It's a near-term digestion of move. Let it pull back, let it digest, and then as long as it holds this channel, it should make new all-time highs in 2026.
When you look at these charts and you see, okay, gold and silver broke out, like what triggers are you looking for? Like, are you playing Sherlock Holmes saying, hey, what triggered this, right?
Yeah.
Are you looking at the Dixie, for example, or the dollar here? Is that something you look at, and
I think you do to
playing?
some extent. I mean, and that's a great point. I mean, the dollar can definitely play a role. We know weaker dollar, usually the metals, especially gold, goes up. But weirdly enough, with silver, it's very momentum driven, meaning that sentiment plays a monstrous role in whether silver's rallying or falling. And right now, silver is obviously king of the castle. It's at new all-time highs versus gold. And so you see that momentum building. I also think, again, when you have a move from 48 to 62, unless the dollar crashed, we can't really say, oh, it was the dollar, right? So it's got to be more of that momentum builder. I think gold is such a big market that, needless to say, it's a little harder to move on momentum. But even gold, again, it's no doubt that sentiment, central bank buying, and all these other factors have led to move up quite a bit.
Can you pull up the Dixie chart real quick? Because I really want to highlight how the dollar actually does have very little influence on the recent precious metals move, to be honest.
Yeah, and look, and a great point on this, right? I mean, the Dixie, even back in September, was at 96. It's at 98 to 99 right now. Basically, the dollar, look at this. I mean, essentially from April, the dollar's gone sideways, right? So again, just like you're saying, look at in April. You want to see something crazy? Go back to silver. Let's look at silver again. Here, I'll bring it up on this other chart so we can take a look. So if we look at silver since April is up. Let's do this measurement here. From April, silver's up 66%, and the dollar's
That's
basically
from
chopped.
August, I think.
Yeah.
That's August.
Oh, August. I apologize. So we got to go back even further. There you go. So look at that.
Even more impressive.
So the dollar, flipping back to the dollar again, the dollar's chopped sideways, but silver's up over 100%. And it just does. You're absolutely right to stress that there's no one factor that is going to be like, this is the determining factor whether silver goes up or down. There's many things that play into it. And I would argue the major one is sentiment.
That's completely flipped to the upside here, which is fantastic. Excited to see it, of course. Gareth, we have 2 minutes left here. Just quickly, because we do have the 2 minutes. Copper is another one I'm quite keen on. We often talk about it, and we always try to squeeze it in when we chat as well, Gareth. What's your outlook here on copper after that massive drop back in August?
Yeah, so the drop here in August, this is still holding inside what I would refer to as a bear flag. So bear flags are sharp drops with inside bar consolidation, essentially price digestion. In fact, it's the exact opposite of what we're seeing on gold right now, right? Gold broke out and is going sideways. That's a bull flag. And so really this pattern formation usually resolves itself with a move down. We have our sharp move, all of this inside bar action. Eventually, I honestly think copper is going to head down here over the next, probably in 2026, and break lower.
So recession? Is that what you're calling for indirectly?
I would say
putting you on the spot here.
I would say yes. I would be very surprised. I think what's amazing, right, is that you have an economy that 90% of GDP is now the AI CapEx, right? And that's so scary because if that ever slows down, which inevitably it will, the rest of the economy is essentially already in a recession. And I'm sure many of your viewers are already feeling like we're in a recession with high inflation. And so you lose the AI trade. And yes, I would say absolutely we're headed towards recession.
Oh, really, really interesting. Gareth, one last question. It's my favorite one to ask. What's your favorite chart right now? You always have a goodie for us.
That's awesome. That's awesome. All right, so let's go just for today with Oracle. All right, Oracle on the long side here, and this is just for today. The stock is trading flat going into earnings. I'm a believer that Ellison and Trump got together and they said, we're going to put Oracle's earnings after the Fed today. So if the Fed says anything that scares the markets and we see selling, Oracle can come out with great news on AI and try to buoy the markets up. So I like long on Oracle, at least for the next few days.
Perfect. Awesome. We'll track it very closely because I know our commentators down below will definitely watch what you're suggesting here and, keep score. So
I'm sure if I'm wrong, they'll call me out. No worries, though. That's why I put myself on the line.
It'll happen. That's what the internet is for. So really, no, Gareth, you've been on the channel a few times now, but still, if people don't know where to find you, where can we send them?
Come over to verifiedinvesting.com. It's a website that I created to be avoiding all of the hype and the nonsense, and we get narratives from mainstream media, hype from social media. We're always getting bombarded, right? And so I love the idea that charts are agnostic. There's no bias in a chart. Price is price, right? And if we can read the charts, we're never going to be 100% on trades and swing trades and investments, but we can usually make a high percentage judgment, meaning high probability assessment and trade and make money over the long run. And it's a very clean way to do things versus all the nonsense we hear out there. So again, verifiedinvesting.com, check it out.
Fantastic. Awesome, Gareth. As always, tremendously appreciate your time. Can't wait to have you back in January or February. Well, hopefully January, do a bit of an Outlook series as well. This was just a, what was it called? Just, when you just look at it temporarily at the day, like what's it called? A crosscut snapshot. That's the word I was looking for. Absolutely. No, Gareth, tremendously appreciate you taking the time. It's always great to have you on. Can't wait to do it again. So, Merry Christmas, Happy Holidays to you, Gareth.
Hey, and, Merry Christmas, Happy Holidays to you as well, and to all your viewers.
Absolutely. Thanks so much for that. And You heard it. Like, I think follow the trend to 7,000. That'll be an interesting one to watch. It won't happen overnight. Every bull market, there are 40-50% setbacks as well, in the miners in particular, and in the junior explorers as well. So keep that in mind. Don't get shaken out. Have strong convictions. Focus on what you own, and to do your proper due diligence. We've seen it this week. You got flushed out if you owned a certain stock because you didn't do your due diligence properly. It was all there. It happened. I'm not going to mention the name. I don't want to bash it. I didn't own it. I didn't have a part in it, but proper due diligence would have saved you. Absolutely. So thanks so much for tuning in. Hit that like and subscribe button. It means a lot to us, and Merry Christmas.